Are you looking to better understand real estate investing and all the possible revenue streams it has to offer? Well, in this video here, I'm going to be breaking down the 4 main revenue streams all real estate properties offer you. So let's hop on in. Hey guys, welcome back. If you're new here, my name is Matthew. I'm an aspiring real estate agent as well as investor, and this is my channel where I post my journey as well as anything I've learned along the way, helping you make better decisions both in the real estate investing, the real estate process, and overall life in general. So if that content of interest to you, make sure to hit the subscribe button as well as the notification bell to not miss out on any of future of my videos. Did you know that the average millionaire has 7 income streams? And while that may seem like a lot at first, when you learn that real estate offers 4 different income streams, you start to see that number be more attainable. So in this video here, I'm going to be breaking down those 4 income streams so you have a better understanding of how real estate investing works. If you're storing any cash in your bank account, like a savings or checkings account or your wallet, these values are going down due to a little thing called inflation. Now, I'm not going to get into inflation in this video, but what you need to understand is anytime you're holding cash, there is inflation that's going to be applied to it. And over the last 100 years or so, the average of inflation is around 2%. So as you can see, the longer you hold cash, the less it will be worth. And this ties into our first revenue stream, appreciation. Now, inflation can be a good thing because if you park your cash in real estate rather than just holding it in cash, inflation is going to work to the benefit of you. Inflation isn't the only aspect pushing up the appreciation of your property. Another way to increase appreciation in your property is by doing minor fixer-uppers that the end consumer could see. It could be new floors, it could be a new fresh coat of paint, it could be new landscaping. Essentially, the renovations you want to do should be more cosmetic that the end consumer or the buyer in the future will be able to see with their eyes. So one thing to note is that while your cash is getting hit with inflation that averages about 2% a year, therefore it's decreasing value by 2%, with property appreciation over the last 100 years, it has gone up, depending on your geographic area, between 3 and 5% and even higher in some other areas. Another cool thing about appreciation is you're able to use other people's money. So if you're looking to purchase a $100,000 home, you do not need $100,000, but rather, let's say $25,000 for a down payment, and then you take out a $75,000 loan. This will allow you now to control a $100,000 loan with only $25,000 of cash. Now, this is great as if this $100,000 property is appreciating at 3 to 5% a year, your return on your cash isn't 3 to 5% because you only paid for 1/4 of that property. Therefore, it would be 3 to 5% times 4 because you paid for, again, only 1/4. So in reality, if the market continues appreciating at about 3 to 5% a year, you're looking at returns between 15 and 20% appreciation on the cash you invested. Now, while appreciation is great, it is only one of the revenue streams. So the next revenue stream we'll be looking at will be cash flow. So essentially, if you've done your due diligence correctly, you should be having a positive cash flow property. This is essentially where the money coming in for the renters pays all the expenses associated with that investment property, as well as some money left over. This money left over is called cash flow. Now, a lot of people view this as the main revenue stream for real estate investing. And to be honest, it is my favorite just because of how simple it is to understand, but also because of how predictable it is, as you're able to accurately predict the income and the expenses you should expect from a property, assuming all your due diligence is correct. As a result, you'll be able to see a steady stream of numbers and be able to smartly invest in properties. In a future video, I'll cover all the different resources you can go to check out to ensure you have all the accurate numbers for your real estate investment estimates. The third revenue stream in real estate investing is principal pay down. So in our previous example, when we bought the rental property for $100,000 using a $25,000 down payment and a $75,000 loan, we're going to be having that loan and having to make mortgage payments on a monthly basis. And with a renter living in this space, this renter, if again, you've done your due diligence correctly, should be able, by his rent costs, be able to pay for the mortgage. And as Each time, the mortgage is counted as an expense in our previous example with cash flow. However, a part of that mortgage payment will be to the interest and a part of it will be to the principal. Now, the interest payment, part of the payment, you can just throw aside as that is just money that you're giving to the bank. However, the principal payment, the best way to look at this is essentially a long-term bank account where you're depositing money into the equity of this house until you're ready to sell or refinance to take that money out. So I know we covered a lot, so let's quickly recap. The first revenue stream we talked about was appreciation, and this is with the property's value going up over time. The second revenue stream was cash flow, and this is the monthly income you get after all the expenses have been paid through the renter's income. Then the third, which we just covered, was the principal pay down. And this is essentially any mortgage payment that is part of the principal payment of that mortgage payment is essentially viewed as a long-term bank account where you hold it and you wait until you either refinance or sell the home. The fourth revenue stream that real estate investing has to offer is tax benefits. As when you own investment properties, there's a lot of different variety of tax benefits you can take advantage of to help reduce your tax bill. Now, I am by no means a tax expert, and I would highly recommend you talk to a personal accountant before making any of your decisions. However, in this video, I'll just try to simply explain it so you have a better understanding. First off, you might be able to write off any of those monthly expenses that take away from your monthly cash flow. This can include interest payments, repairs, maintenance, and a variety of other expenses that you have to make on a monthly basis, as well as you're able to write depreciation off on your property's assets as a capital cost allowance. Now, both the write-offs and the capital cost allowance will help reduce your total income, allowing you to pay less in taxes and therefore save more money. Now, on top of these two benefits, another advantage is that principal paydown is actually locked up in the house, and therefore you do not have to pay taxes on it until you take it out. And if you take it out in the correct way, you may not have to pay taxes on it at all. And I can explain that in a future video. So there you have it. Those were the four main revenue streams real estate investing has to offer. If you're nervous, that's completely all right. That just means you need to continue to educate yourself more until you are ready to invest. So I'd highly recommend looking online and finding any books, podcasts, or YouTube channels that help you out. I know here I'll be breaking down everything you need to know about real estate investing as well as the real estate process. So if you're looking for more education on this content, make sure to subscribe and hit the notification bell to not miss out on any of the future videos, and drop a like if you gained any bit of value from this video. Other than that, guys, I hope you have a great and successful week, and I'll talk to you next week.